Good evening. Call this meeting to order. Porter Johnstown Management Committee, Tuesday, April 22nd, 2025, 6:30 p.m. Call the meeting to order at 6:30. I need a mover and a seconder approval of the agenda as presented. Moved by Mr. Ward, seconded by Mr. Smell. Questions, comments? Call the vote. Carried. Number 3, disclosure of pecuniary interests, the conflict of interests, the general nature thereof. Anyone have any? None? And number 4 is our delegation and presentation. Mr. Jamie Pollock from MNP, our 2024 financial statement. Thank you, Jamie.
Well, thank you very much, Chair. You'd like me to have this on? Okay. I believe in your package, there's a draft copy of the financial statement with our auditor's report and our audit findings report with a recommendation letter. My name is Jamie Pollock. I'm a partner with MNP, Chartered Professional Accountant, and I'm happy to be here tonight. If there's any questions or concerns, you're more than welcome to interrupt me and hopefully I can answer them, or we can have the questions after my presentation. I'll go through the independent auditor's report, not in very much detail, but there are 2 key paragraphs I'd like to bring to everyone's attention. One is the second paragraph, and of course the report is addressed to the members of council, inhabitants, and ratepayers of the township of Edwardsburg Cardinal. In our opinion, the accompanying financial statement presents fairly in all material respects the financial position of the port as of December 31st, 2024, and the results of its operations and changes in its net debt and its cash flows for the year then ended in accordance with Canadian public sector accounting standards. So it's a clean audit opinion. That's what you want to hear from us as your auditors. Also in these statements, if I bring you to the emphasis of matter for the comparative information, we draw attention to note 3 to the financial statements, which describes that the port adopted Canadian public sector accounting standards on January the 1st, 2024, with a transition date of January 1st, 2023 from International Financial Reporting Standards. These new standards were applied retrospectively by management to the comparative information in these financial statements, including the statement of financial position as of December 31st, 2023 and January 1st, 2023. In the statements of operations, accumulated surplus, changes in net financial assets, and cash flows for the year then ended December 31st, 2023 and related disclosure. Our audit opinion on the comparative figures were not modified because of the change in the accounting standards. So it's still a clean audit opinion, what's presented as comparative figures in these financial statements compared to 2024. I won't go through the rest of the auditor's report or we'll be here for a long time. So if we turn to the statement of financial position, this is your balance sheet. It is at a particular point in time. If we look at the left-hand column at December 31st, 2024, your total financial assets was just over $15 million compared to $16.5 million the previous year, with the biggest decrease in short-term investments. Under liabilities, just over $5 million and $96,000 compared to $4.7 million of the previous year. The main reason is your outstanding trade payables relating to the dryer retrofit and building upgrades at the end of the year. So your net financial assets, just over $10 million compared to $11.8 million from the previous year. Under below, we have net financial assets or liabilities, your total tangible capital assets, which is recorded for net book value for accounting purposes. So it's not necessarily your replacement costs or your fair market value, but recorded at cost less accumulated amortization. That amount is $76.4 million, less deferred contributions, which is money that you receive from federal and provincial governments, mainly the federal government, which you've amortized into income over the life of those assets. That remain in balance is $29.5 million. Total non-financial assets is 47 million compared to 40 million, increase of $7 million. And majority of that is the 9 million that was put into your infrastructure assets during the year, and mainly to the new dryer that was installed. So accumulated surplus for the financial statements, 57 million compared to 52.2 million from the previous year. If we go to the statement of operations or your income statement, and if we kind of look at the middle column compared to budget on the left and actual on the right, your total revenue for the year in the middle column, just under 11.8 million, just short of last year of 11.9 million, but more than budget of 11 million, or a 7% increase from budget. Expenses for the year, 5.7 million, less from the previous year of 195,000, or 3.3% savings. And compared to budget, you're actually savings of 560,000 to the good, or 8.8%. So your net revenues before other items, which is mainly capital, your surplus for the year is just over 6 million at 6,036,000 compared to 6,044,000 from the previous year, basically right in line from one year to the other. But you also exceeded budget by $1.3 million net, or 28%. So you had an excellent year when you look at these financial statements. Other revenue includes amortization. Net change is $1.2 million to bring you to your annual surplus. Third line from the bottom, 4.7 million for the year. And this is for public sector accounting standards. It's not really what you look at as operating surplus. It's just your overall annual surplus of 4.7 million according to PSAS. If we turn to the statement of changes in net financial assets, under the actual column, we take that annual surplus of 4.7 million. We add back your amortization of tangible capital assets, which is a non-cash item of 1.7 million. And then we see the acquisition of tangible capital assets of 9.7 million. Now that is actually net of the next line, which is that you receive $2 million from the federal government to help pay for the dryer upgrades. And that's recorded as revenue on this schedule to offset that 9.7. So overall, your net cost to do the major upgrades was 7.7 million in the year. We have amortization of deferred capital contributions and change in prepaid expenses. So your overall decrease in your net financial assets was 1.8 million compared to a positive change of 2.4 million the previous year. So your net financial assets at the end of the year is just over $10 million, which is your financial assets of cash, short-term investments, and AR, less any outstanding debt and trade payables. And we turn to the statement of cash flows. I just want to bring your attention under the cash from operating activities. Items not affecting cash, which includes your annual surplus, was 5.9 million compared to 5.3 million from the previous year, a positive change of $600,000, plus change in non-cash working capital balances. Your cash from operating is 6.7. I was taught all the way back in high school, if you don't have a positive number there, then you're kind of in trouble because you're not making enough cash flow to pay for other items. So you're quite positive with that amount of 6.7 million. With that, you receive $2 million for deferred capital contributions for the dryer project. And with those two combinations, plus the change in your investments of 709,000 cash coming into your operating bank account, you used all that to pay for your tangible capital assets of just under $10 million for the year. So with all that, your overall decrease in cash is only $404,000 for the year when you take in consideration for the capital work that you did during the year and you're still left with $10.5 million in cash at December 31st, 2024. It is at a particular point in time, so the balance in today could be quite different than what it is at December 31st, 2024. If we go through the next schedule, which is the schedule of tangible capital assets, third column in, you'll see the equipment, additions of $6.6 million. And then there's still assets under construction, the third column in from the other side. Additions during the year, 2.6 million, which is the second row. These two basically makes up the $9.7 million addition. The grain dryer came in at 6.3 million. The dust system, 157,000. And then there was grain bin repairs of 423,000 and garage upgrades of 65,000. So net book cost $90 million, accumulated amortization, and I'm looking at the second column in from the right-hand side, 13.5 million. That leaves you a net book value of $76,000. When you compare to your cost base of $90 million, you basically have 80% of your full useful life left of those assets. So you have a lot of assets upgraded, especially in the last 20, 25 years since devolution of the port to the township. So you have a long-term use of those assets that you have on the book as of December 31st. If you go to page 6, we have a breakdown of the schedule of accumulated surplus, and you might ask, okay, Mr. Auditor, that 57 million doesn't make much sense to me, but we can break it down what makes up that 57 million. So we have kind of an operating surplus of 11.3 million compared to 13.1 million from the previous year. Your remaining portion of your accumulated surplus is 45.6 million, which is mainly in your tangible capital assets, $76 million less deferred capital contributions and asset retirement obligations outstanding at December 31st. The next schedule is how we change from one year to the other. And then we just focus on the operating surplus. We started with $13 million. You add your surplus for the year, 14.7. We add back the non-cash item for amortization. Then we spent 9.7 million for capital assets. You received $2 million, from the federal government. You pay down some debt, deferred contributions. So overall, your operating surplus decrease of 1.7 million to 11.3. But on the invested in capital assets, that went up by 6.5 million. So the net of those two numbers equals your annual surplus of 4.7 million, which is roughly 400,000 higher from the previous year. So for 23 and 24, you had excellent operating seasons with the port. Just kind of couple of the things I'd like to bring to your attention. Note 6 on page 11, because of the change over to PSAS or Public Sector Accounting Standards, we're required to report asset retirement obligations, and they are now on the financial statements. It's a long-term estimate of what the cost will be to remove anything that could be environmental hazard, and that amount is 1.2 million estimated at December 31st, 2024. Note 7 is deferred capital contributions. The leftover unamortized balance is 28 million. You received another 2 million. 527 was brought into income in the year with a closing balance of $29.5 million. So overall, those are the financial statements. You had an excellent year with a surplus for PSAS of $4.7 million. Operating, you use those funds to help offset your capital expenditures, and you're in excellent financial shape, and we're prepared to issue a clean audit opinion on these financial statements once approved by council. Is there any questions or concerns or
Any
comments?
questions, comments from the committee? Mr. Macaulay, Frank, go ahead.
Yeah, I have two questions. One, I'm unaccustomed to seeing audited financial statements with budgeted numbers. Typically, I see current numbers and previous year numbers. Is there a reason our budgeted numbers are included in there?
Yes, because that's due to the requirements of reporting standards for public sector accounting standards that budget numbers have to be provided, and it gives some sort of accountability of management and council to the ratepayers on what they're basically, from a municipality point of view, what their tax dollars were raised and what they're used for. So we present on that same basis what were the operating dollars budgeted for and the expenses. But that is a very standard presentation when it comes to PSAS statements.
Okay, great. And that came this year because we changed. And I guess the second question relates to that, and it's the reference to asbestos. At no point do I recall any reference to asbestos in any discussion over the last number of years. And that idea of asset remediation really has only come to the fore because, again, we've changed accounting standards. Is that correct?
Yeah, that's correct. And that's the reason why it's now on the financial statements. And the reason why I'll say there could be asbestos. Now, this is an estimate. We know how old your buildings are. We know that up to 1995, asbestos was used quite a bit as insulation. There could be potential asbestos in those buildings. So we set up an estimate for that, but that's just one part of it. The other part is for the salt retention pond that is there at the port. I think it's in the land that was purchased maybe 10 years ago. There will be an obligation to restore it to its original state once that retention pond is no longer used. So that's a future liability that needs to be recorded on the financial statements. I'll talk more in my measurement recommendation letter, but further study will be requested to be made by your management to find what the true maybe cost will be to remove any potential asbestos that could be in the buildings. And with asbestos, I know it's scary, but if you don't touch the stuff, there's no harm to it. It's just when you remove it, when there's create some sort of environmental liability issues for the port.
Great. Thanks for your answers, Jamie.
You're welcome.
Any other questions, comments? Go ahead, Mr. Ward.
Thank you, Mr. Deputy Mayor. So Jamie, so the $1.2 million on that, I had a question about it, and I think you kind of touched on it, but so is it based on some sort of a standard you calculate from, or what would be the?
Yes, so that's a very good question. So out of the 1.2 million, we estimated 400,000 for potential asbestos removal, and that's based on the square footage of your two, I'll say, administration buildings. It's nothing to do with the elevators. It's just all due to the administrations. We got the square footage of that. And we know based on research, I don't want to say, well, Google research and then other neighboring municipalities that had asbestos removed, we know the cost per square footage to remove that. So that was applied to come up with the future estimate on that will happen. The other 800,000 relates to the salt retention pond. That was some preliminary information that was undertaken by your management that they had on file. And I believe there is going to be a proposal or tendering that's going to happen in the next few years to really firm up what is going to be the work done if you have to drain that salt retention pond, and bring it back to original state, which has to be undergone. My understanding every few years. So it is information provided to us, and that's how those estimates came back. And it's in present value of today's dollars. You'll see that balance will keep growing each year based on the rate of inflation.
All right, thank you very much. That's it.
Any other questions, comments? Sorry, I just have one. It's just information only, Jamie, if you could help me, is on page 9. Where our net financial assets went down, I guess, from 11 million to 10 million. Well, 11.8 to 10 million. That's under the statement change in net financial assets. Do you see that?
Yes, okay, yes.
Why did that, like, we go from 11.8 to 10 million?
That's a very good question. So there's two parts to that.
Okay,
So one part, so when you take your cash flow that you received in the year, you use part of that to purchase the capital assets. So that's part of the reason why your cash went down from 10.9 to 10.5. And the same with your investments that went down by 600,000. You had to pay for part of that dryer upgrade yourself. So you had to utilize those dollars to help pay into those assets, which is presented below as tangible capital assets. And the second part is timing of trade payables. In that trade payable increase, which is at 1.7, which is mainly trade, there's about $600,000 that's in that 1.7 that relates solely to the dryer upgrades and the new dryer. So that's why the liabilities went up. You used your cash, so overall your net financial assets went down by 1.8. To me, it's not a concern. To me, it's that you took 1.8 million and put it into your tangible capital assets in the year. It's nothing to do that you've lost or money anywhere. It's just you took those financial assets and put it into non-financial assets.
thank you. Any other questions, comments? Thank you, Jamie, for your report. There is a recommendation, but it's coming up down to accept it at a later time, so.
I just, before I go, I do
Yeah.
want to bring to a management recommendation letter that I've provided in the package. And it all ties back into the asset retirement obligation, so there's a good to cap everything off. And it just states, and it's just the one issue, we did bring it to your attention, and they brought their feedback to me, which I did not include in the letter, but they're fully aware of the issue that I raised, is that with the changeover in accounting standards from International Financial Reporting Standards, or IFRS, to Public Sector Accounting Standards, PSAS, in 2024, the port recorded asset retirement obligations, or AROs, on the financial statements with an estimated value of $1.2 million. The AROs were determined on the best information available to the port and to the township of Edwardsburg Cardinal. The AROs relate to the future estimated liabilities of asbestos removal and the closure of the salt retention pond back to its original state. We recommend that the port undertakes a formal study in 2025 to determine if all the environmental liabilities and its future estimated costs have been obtained. This will assist the port to properly budget for these potential future costs, when these costs will be incurred, and how those costs would be financed. So that just brings everything together to bring everyone's to their attention. And it might be 5 years from now, it might be 20 years from now, but it's good that they're on the financial statements. And that's the purpose of the standard, that people are aware of that those potential liabilities do exist, and you have to somehow plan for it when you do come to it, or how you're going to build up a reserve to maybe pay for those costs or raise debt, but at least it's aware that's on the financial statements to the users.
Thank you again, Jamie.
And
Well done.
I'd like to thank very much to Leslie, Rhonda, and Sean for all their assistance during the audit process, and went very well this year. Especially from my point of view, they might complain about me behind my back, that most people do. I know I'm an auditor, so, but I really appreciate their cooperation, and I look forward to working with them again next year.
Thank you so much.
Okay, thank you very much, everybody.
Moving on to the minutes of the previous Port Management Committee minutes. Port Management Committee receives and approves the minutes of Port Management Committee meeting dated March 24th, 2025. Need a mover? Moved by Mr. Ward, second by Mr. Martell. Any questions, comments, or call? All in favor? Carried. Business arising from previous committee in the whole meeting, if any. Like that, hockey game on tonight. Number 7, discussion items, none. Number 8 is 8A grain operation health and safety report. Mike, you're talking about this?
I will. Thank you, Mr. Chair.
Go ahead.
The grain report for March 2025. Our inventory ended at 116,302 metric tons, which is extremely high. Traffic is high. We never really had too much of a slowdown since the Seaway closed. It opened quick and we were back loading again. Market conditions or the uncertainty effects of the tariffs have created opportunities for grain movement. I wish I could tell you what it was, but no one seems to know anything about what's happening. So we'll just take it that the grain's coming in and it's going out. Traffic for the month of March received 34,149 metric tons, which is about 3 times higher than we normally receive. We shipped 3,000 tons via truck, 19,000 via vessel, and nothing on rail. And we loaded 1 vessel in the month with corn, the Balatia. We had 1 learning event in the month of March. One of our workers slipped while moving the spout loading a vessel. Our labor report, our labor hours for the month were 3174 compared to 1965 the previous month. But again, you can see that the volume was extremely high. And we had an inspection in the month of March and received a AA from them. And that's it for the operations report and health and safety. I'm going to go right into the safety report.
Go into the safety report and then we'll
Okay.
come back to any questions or comments.
Okay, I won't read it. Just the overview is we continue to work on what we need to do to keep our training and records updated. John continues to do a good job. The focus this month certainly was the confined space. And that's it for that report.
Any questions, comments? Go ahead, Mr. Ward.
Thank you, Mr. Deputy Mayor. Just one question. I know we've had this conversation, just been a while. Is there anything we can do? I mean, and AA is good, I know, from a rating perspective. Is there anything we do or can do to influence that, or is that just sort of up to the the powers that be, so to speak?
Yes, to that whole thing. Yes, we can continue to work hard, but we continue to move a lot of grain. We have a lot of trucks coming in. I mean, sometimes the quality is a little off. It depends on the time of the inspection, what we're loading, and quite honestly, the mood that the inspector is in that day can influence it.
Oh, good. Perfect.
Yeah. I mean, some days he'll blow through, and some days he'll want to get a ladder with a putty knife and scrape walls. It's a little hard to predict, to be honest with you.
All right, fair enough. I mean, hey, AA is still pretty good.
Anything with an A in it, we
Yep.
consider a victory.
Yep, sounds good.
Yeah.
That's it.
Any other questions, comments? Yes, go ahead. Mr. Cameron.
Sorry, can you
You gotta
come
go
up to a
front.
mic?
That's okay.
Through the chair. Mike, with regards to the confined space, who's doing the confined space entry training right now?
What's the name of that company? No, it's who did it last year? You remember? It's the company we have that has done it for the last 10 years, but to be honest with you, it escapes me right now.
Okay, fair enough.
Yeah, that's what they do. They do confined space.
Fair enough. Good, because I know I asked the chief of the Eversburg Cardinal Fire Department in the past if they would do confined space, and they're not trained in that.
No.
Nor do they have the insurance for it. With regards to that confined space, if there was a confined space entry issue at the port, is it the outside contractor that would come in and actually perform?
We have a contract
Yeah.
with them to do some emergency rescue as well.
Yeah.
But our guys are completely trained to do confined space entry and confined space rescue.
Okay.
Yeah.
Thank you. Very good.
Mr. McCauley?
Thanks, Chair. Mike, the increase in grain inventory at the end of the month, that's really a reflection of farmers having grain stored on site and then bringing it to us in anticipation of it being sold and or exported, I guess. So there's a lot of grain sitting out there at various farmers that really only comes to us in anticipation of a sale. Am I correct?
Somewhat. Typically, it comes in after a sale. They'll hold on to it. You know, they have, there's so much on farm storage now, they don't want to pay for us to store it for them. So typically the contracts will be put in place and then they bring the grain into us. What we're seeing right now is a bunch of staging for vessels for April. We have 4 vessels that we've loaded and we'll load in the month. So it was staging for that.
Great. Thanks, Mike.
Any other questions, comments? Go ahead, Mr. Smell.
Thank you. Through the chair to Mike, your confined space, going back to that, is staff trained on confined space too?
We have some staff. I know Jeff has taken it in the past, and certainly the leads are trained in it.
Okay.
I'm not specifically, and
Well, that's what
probably
I
not
was wondering.
Rhonda or Leslie, but
No, I meant the men that are on the floor and stuff, you know.
oh yeah. The maintenance is, I mean,
Okay,
Yeah.
thanks.
Any other questions, comments? Okay, moving on to 8B, capital projects. Who's going to speak on that? Leslie?
Sure. Thank
Okay.
you. So although it's only been a month since the budget has been passed, we thought it was prudent to include this evening just to show that we're gaining some good momentum. There's about 6 POs that have been issued, RFPs and tenders currently out, and 1 project that Jeff has had already completed. So we'll continue on a monthly basis to bring this forward with updates.
Questions, comments from anyone? Good. Moving on to 8C, maintenance report. Jeff?
Okay, work in the maintenance department during the month included the following: continued with fabrication of machine guards for conveyor head and tail pulley areas. Again, this is part of the federal workplace inspection that took place almost a year ago now. We are gaining ground on it, but it is a big project. We conducted annual inspection and maintenance of marine and rail bucket elevators. We installed the Red Wing dust nozzle, dust control nozzle, and modified track for truck loading spout. This was part of the track shed expansion project. We filled many major potholes in the track shed area with gravel. Pressure wash number 2 ship loader and preparation for the Nuero technician. Empty bin maintenance of annex bin 8, replace a hydraulic pump of rail scale hydraulic control unit. Pump had become noisy and pressure was fluctuating. We keep a spare pump on hand just in case this is the first time this pump has ever failed, but we do have a spare. And we can change it in less than an hour because that controls the scales, the turns, everything to let grain in and out of the building. Work with electricians and Nuero technician Frank Beckman to troubleshoot, repair, replace broken parts on number 2 ship loader and to determine why we're having reoccurring winch brake failures. Frank was here for 3 days last week from Germany. We did make some determinations between Frank and my guys, what the brake failure issues, what was causing that. Some was from their end, some was from our end. So the real test will be the next vessel we load. We also came up with a plan to eliminate surging of the pipes, the loading pipes, which contributed to the brake failure issue and some of the parts being worn out before their time. So we've changed the control logic from basically an on-off, which is the discharge valve on the bottom of the spout, which is either open or closed. So it's on-off to what they call proportional integral control, which it operates basically now like cruise control or your car or your furnace thermostat. It'll be more subtle changes as the load varies. And what we're doing is measuring the load, actual weight of the shipping pipe itself with grain in it. As it becomes heavier, the valve will open more. If it lightens up, it closes. So I'm anxious to see how that's going to work. This should solve some problems, but like I say, the real test will be the next vessel. Electrical department, we replaced electromechanical shuttle relay with a new electronic version in number 2 crosscut sampler. These little things have been a pain for some time with us. So this was just getting ahead of the failure. We've updated it to newer technology. Conducted grain handling equipment checks during vessel loading. Conducted monthly premise inspection as per GMP requirements. Weekly, monthly, and quarterly dust inspections and maintenance. We're compiling a list of equipment and program sequence deficiencies for the annex equipment installed with the new grain dryer. Once the list is complete, we'll take it to the appropriate contractors and have the issues resolved. That project was left with some real problems that don't let us run the equipment, the sequences we need to. So we're working on the list ourselves, and that, like I said, at that point, we'll go back to the contractors and make it work the way we want it to work. We installed electrical operators and new track shed doors so that these doors could be operated electrically. This was sort of a fix on our part. Draper Doors is doing the work, but when they installed the equipment, it wasn't XP rated, which everything in our facility has to be. So we went ahead and we made it work with what was there. Currently, there is no, despite that it's some of it isn't XP rated, there is no fear of an explosion of any sort. And there's many internal combustion engines through that track shed every day, and it's not an issue, but it will be brought up to ESA standards when they get the proper parts. Again, we worked with Frank Beckman from New Arrow again, and we changing the motor on the HVAC unit in the Marine Gallery MCC. Any questions?
Questions, comments? Go ahead, Mr. McCauley.
Jeff, we're having problems with the number 2 ship loader. Why are we having problems with only number 2 and not number 1 and number 3?
Because number 2 takes 50% of the load, Frank.
Okay.
It's hours of use.
Okay. So we don't anticipate those same problems with 1 and 3.
We don't, but we're doing the same fix to all of them.
Good. Thank you.
Go ahead, Mr. Ward.
Thank you. Just a quick one as well. Is there a need to do, or is there even something we could do to accelerate this machine guard fab and install? Like, is it a safety risk, or is it like, and is it a low or high safety risk, or is it just?
I'm going to say it's a low safety risk, but it's something we have to do to become compliant with the feds.
And is there a way to accelerate that, or do we have a
The
desire
only
to
way would
accelerate
be
that?
to contract it.
Contract it. Okay. Okay. Thank you.
Any other questions, comments? I just have one, Jeff, and that's our dryer. Everything will be up and running to the way we want by season in
Yes.
September.
Yes, it will.
Thank you. Moving on to 8D financial report, and Rhonda, you're going to speak on that, please?
I will, thank you. Our revenue for the month of March was 638,000, which is an increase of almost 300,000 compared to 2024. The port saw this significant increase in the harbor and grain services due to the loading of a corn vessel, high grain storage, along with the continuation of a busy grain receiving schedule for the month. Our expenses were 531,000, which is higher than 2024 by 156,000, mainly due to new positions, casual retention, and increases, along with an increase in the utility usage. The port ended the month with a surplus of 106,000 compared to a loss of 36,000 in 2024. We've now completed the first quarter. We had a successful start to the year with our revenues at the end of the first quarter being 1.6 million, which is both an increase to the first quarter budget by 283,000 and an increase of 635,000 over 2024. Our expenses ended the quarter at 1.6 million, which is an increase over budget of 107,000 and 2024 by 445,000. That being said, the port ended the first quarter with a surplus of 18,000, which is a higher surplus than budgeted by 176,000 and higher than 2024 by 190. So all in all, we had a great start to the first quarter of 25. The ports transferred our first quarter management fee payment of 250,000 to the township. Our receivables continue to stay 30 days and under at 739,000. Our payables are at 221,000. And our cash on hand is at almost 7.4. So along with the breakdown chart on the next page, I've included the first quarter investment update. The note, the operating and HESA interest is down slightly. And as you can see, we also have that GIC that'll be coming due on July 2nd of 2025. Is there any questions?
Questions, comments?
I got one.
Go ahead.
So, and I see, and I think I just want to make sure that it does make sense, and that we're at the end of that now. I know we just had the audit, and we had 10.2 or something like that $1 million at the end of the year. Now we're down to 7.4. I think it's because we had to pay off a bunch of things. And so is all that done now and paid off, and now we're back to sort of the nominal levels with the payables being low, I see as well. We're stable?
Yeah, I think
Okay.
this is typical for this time of year.
Yeah. Okay, good. Thank you.
Mr. McCauley, anything?
No, thanks, Chair.
Thank you. Thank you, Rhonda. Moving on to the traffic report. Who's going to do it? Traffic report?
I can read it over.
Okay, Rhonda, go ahead.
Just salt, we had salt, so we've had, I guess that would be the one that was in January. And then we just unloaded one on Friday. And then the 18,900 ton of the corn that went out. So we're just right now at 2. Like Mike said, we have 4 vessels in April. 3 of them are already loaded and 1 is for the end of the month.
Thank you. Any questions, comments? Nothing? Okay, thank you. We're moving on to 8F, and that will be the GM report. Leslie, you're speaking on that.
Sure. Thank you, Chair. So I'll just kind of quickly go through the list with respect to salt management and ECA reporting. Our 2024 annual monitoring report to satisfy terms and conditions of our ECA was submitted to the ministry on March 31st. And then Rhonda already spoke to the salt deliveries that are scheduled for April and May. With respect to marine security, we received approval from Transport Canada on our amended security plan. And we're also in the process of working on our security certification for the port that expires at the end of September. We're working actively with Canada Border Services Agency on reviewing our existing and potential licensing options. Currently, we're licensed as a sufferance warehouse, and just seeing how we can expand and enhance our regulatory approval processes to enhance our business operations. We already spoke to the capital projects. The container loading spout project, Jeff spoke to it briefly with respect to the doors, but that's also been a frustrating project for us. But I'm very pleased that the port team has stepped up and they're currently working with the contractor and the electricians to make sure that we come up to ESA standards so we can get that in operation. Okay, Jeff just told me that it is fully functional at this point. Thank you. I'd be remiss not to mention the items that Jeff spoke about, the container loading spout, the issues at the annex with the dryer, the spout. I'm really proud of the team that despite the frustrations and because we really haven't had any breaks in the season, it just kind of continued after the harvest. The team has really been superstars. There's been no blame placed on anyone. I see everybody collectively working together to try to, solve these issues so that we can move forward. So I think it's just really impressive to see the team coming together. On that note of the teamwork, the strategic plan, thank you all again for your input back in March. I'm meeting with the consultants tomorrow afternoon to review the draft, and then our next phase will be to circulate that to our stakeholders, our customers, and the general public for feedback. So that's good news on that front. And then we just continue with business networking, talking to potential customers, clients, just seeing how we can expand so that we can hit the ground running when we do have a new strategic plan in our hands.
Questions, comments? Frank?
Oh, good, thanks.
No, I just have one, and on this our dryer and container loading spouts, we're having issues. Are they covering it? The contractor covering it because it's only been a couple months old?
I approached Horse about the container loader, and they say, yes, it is covered by warranty. I'm still working on the dryer. Once I have my list of deficiencies complete, then I'll approach them, but in my view, it will be.
Thank you very much. Okay, no other questions, comments on GM's report? We're going to move on to the basement bin wall repair project. You're going to talk about that, Leslie, please?
Sure. So our senior advisor has, this is the capital project that he is looking after. So on his behalf, I'll present to you this evening. So we're looking to recommend awarding the basement basement wall repairs, as described earlier this year in the 2025 capital project listing. So Robert had provided a lot of background information, but as you know, this is an annual project that we try to budget for, and it's kind of piece by piece work. So what we're looking to do is to continue with the project for a total of 35 window repair and wall repairs, and to also source the project to the previous contractor, Samoda. And that the project would not exceed the budgeted $450,000.
We have a call to order here, so I'll read the motion. Port Management Committee approves the award of basement wall repairs 2025 project to Simoda Inc. At a unit price stated above. The total amount spent in basement wall repairs does not exceed $450,000, excluding HST, allocated to the 2025 capital budget. And that the Port Management Committee approves Port General Manager signs a contract on behalf of the Port and Township. Questions, comments on this motion? None? All in favor? Sorry, need a mover? Moved by Mr. Mayor and seconded by Mr. Ward. All in favor? Carried. Number 9 is the approval of disbursement port manage accounts.
No.
Sorry?
Item H.
Oh,
Mr.
sorry,
Chair.
8H, our motion. I need a move and a seconder that the Port Management Committee reviews and approves the audit report of Port Johnstown financial statement as provided, MNP LLP Charter Accountant. And that the Port Management Committee recommends the council receives and approves the 2024 Port of Johnstown financial statement as provided by MNP and LLP Charter Accountants. Moved by the mayor and second by Mr. Smell. Questions, comments before I call? All in favor? Carry. Thank you. Now we're going to move on to number 9, approval of disbursements, port accounts. I need a mover and a seconder to approve the disbursements. Moved by Mr. Mayor, second by Mr. Martell. Questions, comments on any of the disbursements? Call. Carried. No, because it's no recommendation. It's just recommendations. There's no motion, just recommendations.
Through the chair, it was common practice of the committee to receive and review the A through H, or normally. It's not a requirement, but it is a common practice of the committee.
So do you want me to go down to, back to 8A to 8F?
Correct. Yes, please.
Okay. I need a move and a seconder to approve 8A to 8F. Any questions, comments? Carried. Any council inquires, notice of motions? Council has nothing? Okay. Chair's report, I just have a couple. We had Earth Day today. A bunch of us went out and picked some garbage up Port of Johnstown, was well representative. Had a barbecue. I didn't stick for the barbecue, but maybe Leslie, you can speak a little on that. We supplied we didn't do the cooking, but we supplied the,
Sure, yeah. So we were the hosts, so we purchased all the items for the barbecue, and it was gratefully hosted by Greenfield. They have a very nice venue, and we were not able to cease operations to prepare for the barbecue. So we were able to collaborate with them, and it was a really productive day, good turnout for the barbecue.
what was the total people there? Geez, it was a good crowd. I didn't count.
Just under 100.
100 of us? Good. So how many bags of garbage at the end? Do we know yet?
I don't think we know, but I think we're really grateful for the Township Recreation Department that went along and collected all the garbage. They
Yeah.
were fantastic.
Good. Yeah, it was well done. Thank you. And I just have a trade show this weekend for anybody at the Leo and Prescott, Thursday, Friday, Saturday. So I'd like to make sure I'll be out there Thursday, and I think make sure that we got everybody helping out, pitching in from the council part of it. Okay, that's is there any questions from the people in the gallery? Any questions? Okay, we're going to go into closed session. And Mr. Ward, you have the closed session?
Thank you, Mr. Mayor. Moved by myself and seconded by Mayor Tory Deschamps. That committee proceeds into closed session at 7:22 p.m. in order to address a matter pertaining to A, 239-2K, a position plan procedure criteria or instruction to be applied to any negotiations carried on or to be carried on by or on behalf of the municipality or local board, specifically approved closed session minutes from March 24th, 2025. Section 239-2K, a position plan procedure criteria or instruction to be applied to any negotiations carried on or to be carried on by or on behalf of the municipality or local board, specifically business development opportunity and contract negotiations, written and presented by the client. Section 239-2F, advice that is subject to a solicitor-client privilege, including communication necessary for that purpose, specifically stevedore operating agreement, verbal.
Thank you. All in favor? Carried. We're going to take a 5-minute break. Closed session. Thank you.
Thanks, everybody. I'll see you in person next meeting.
Bye, Frank.
Bye-bye.
Okay,
Air.
I do believe.
Moved by
Mr. Ward
myself,
has-
oops, sorry, yeah, moved by myself and seconded by Mayor Tory Deschamps, that the closed meeting of committee does now adjourn and the open meeting does now resume at 8:52 PM.
2 p.m. Call for vote. Carried.
You have to wait to be back in. We're good.
We're good? Okay, chair's report, we report it back in the open.
Sorry, Mr. Chair, approval of the minutes.
Sorry, approval of the minutes, please go ahead, Mr.
Moved by myself, seconded once again by Councillor Waddy Smail, that the committee receives and approve the minutes of closed session dated March 24th, 2025.
Questions, comments? Carried. Okay, chair's report at a closed session. We report the committee met, closed session, and that we gave direction to be provided to the port general manager. Adjourn, who has a motion to adjourn? All in favor? Okay,
We need a mover and a seconder, Mr. Chair.
yeah. Move on the adjournment. I thought Waddy had it, no? Okay, go ahead, Waddy.
Thank you, Mayor, Deputy Mayor. Moved by myself and seconded by Councillor Joe Martell. The committee now does adjourn at 8:54 PM.
None goes carried.
They'll give my road.